Hello and welcome to the Stock Planner channel. Today I want to talk about a stock called Halliburton. It's in energy and oil and gas. Oil has been doing nothing but going up. I read an article that says that oil is going to go to $6 to $7 a gallon. It's already $8 a gallon. Gas in California is already $8 a gallon. This should bode well for Halliburton. And we're going to show an option play, a diagonal call spread. It's a debit spread with the hopes that we're going to achieve at least 7%. Let's see if we can do it, and let's see if we can win. Before we go, let's get started. I want to tell you that the Stock Planner channel is an education channel. We're sharing our ideas. I'm showing you my trades with the hopes that it'll help you, but you have to do your own due diligence, and you must touch the data. Never take anybody's advice, especially people off the internet. Do your own due diligence, make your own decisions, and win. Learn it. Let's get started. Well, we're looking at Halliburton, which is a major corporation doing energy and oil. According to Simply Wall Street, it's undervalued, and these earnings are expected to grow around 26%. Always looking for a big green snowflake where the future looks great, health of the company is good, and the past history is good. Halliburton has competitors. Baker Hughes is one that I know, and the other ones I'm not so familiar with. Since the beginning of the year, which I think is when the recession started, the oil prices have been climbing. We see a steady rise. You have to ask yourself, is there going to be a pullback now, or will it continue to grow? According to Seeking Alpha, higher oil and gas prices should improve the bottom line for Halliburton. Their margins should grow, even if this industry is under fire by the administration and regulations. If we do go into a recession, our global and local usages of oil should be lower, and that can affect the upside of Halliburton. Short term, I think we're good. Next 2 or 3 years, this stock should level off. Well, if you think this stock is going to keep going up, let's find a long play. Now, don't try to understand this spreadsheet, but basically it's a model that I look at to see what I need to get to reach a goal with a small account, and my account's bigger, but I just multiply this number by 4 or 5. If I have $40,000 or $100,000, just multiply it by 10. But anyway, to reach $100,000 in 10 years' time, I need at least make about 6% per quarter, which gives me 24% APR per year, which is what Warren Buffett does. And then based on a 6% take profit, if I bought the stock, and a 3% stop loss, what my stop loss and target prices would be. I just use this to kind of plan out and control my trade. Then I have a tool. I'll show you this again in a minute, but I'm looking at the expected 3-month profit, which is about 15%. I don't know which way it's going to go, up or down, but this stock here will do it, and I would exceed the 3 month in 3 months by 6%. So it's and then based on investing around $4,000, what would I get at the end of 3 months using this particular strategy that we're using today, which is a calendar spread or a diagonal calendar spread. And I basically figured up the model using various different option scenarios. I've come up that I can expect with a 60% win rate, between 50 and 60%, which is, 50% is calling twice. I need to achieve and then plan out a trade that's about 7%. And this is a ballpark model. So whatever I do, I'm going to need to make, if I use this strategy, it needs to produce around 7%. Let's see if it can. Using a free tool called Options AI, we have $41. That's what Halliburton's currently trading. Projecting out 3 months, we should get 15%. That's expected move. Now the problem with this is you don't know if it's going to go up or down expected move, but according to options and an option calculation, option pricing, options are trying to say that the market is expecting 15% move for Halliburton, one way or the other. Using that 15% and putting it in the chart range, slipping over to the table, using a calendar spread or a diagonal calendar spread where the strikes are different. The strategies you have to pay. It's not a credit spread. And the max loss is $600 and the max profit is $4. And you need to stay above 41.37, which is currently at that price now. needs to go up higher. And if it goes up just a little, it's at 41. Let's just say it goes a little bit to 42, 50. You'll take around 60 to 80, and I'm going to shoot for 100, somewhere in that area. A 4% move, around 100. 4% move, the expectation is going to move 15% in the 3 months. This is about 3 months, August. The short strike expires in 2 months, but you can always put another one on. And I post these trades out on Discord. It's free. But with a 15% move, either way, you would expect to get somewhere on that line if it does move, or somewhere on that line if it doesn't. And if you hold the expiration, this is what you're going to achieve. But we're shooting for 100, and $100 on a $600 investment is somewhere between 15 and 16%, which gives me, we're expecting about, in other words, to make our goal of 6% with a win-loss rate of about 60%, win rate of 60%, we need to make 7%. This does that with a little cushion. So we're set and planned out to win. Now what really happens is you win some and you lose some. If I win half, I still have a winning system based on the projections. And if I can win 6 out of 10 or 60%, I'm going to exceed my goals. So this is my plan and my trade for Halliburton. I plan on using a diagonal call spread, paying $600, hopefully to make 100, but maybe more if it moves quickly, and to get out at around 3 or to 5% and get out if it goes in the wrong direction. What do you think of this trade? Please leave your comments below. We have a free Discord chat giving the trends, the watch list. Also, I have the signals out there, the MACD, the RSI, and the stochastics. All that's free, and my settings for my TradingView charts. Don't forget to subscribe to my channel. And for the price of a cup of coffee, you can support the channel. Out there I have a roadmap with the trade lists, the buy and sell signals. Also, we have the running totals, and I have a 3 indicator strategy out there based on the MACD, the RSI, and the stochastic RSI all occurring at the same time.